Good evening to you all. I'm surprised and delighted that a third of you already know and have invested in VietNam Holding, and obviously excited to talk about the Vietnam story to the two-thirds that haven't yet followed the company or invested into the fund. So just a quick overview, as Mark said, we're a London listed, we're a Guernsey company, but we're listed on the main board of the London Stock Exchange. I'm the executive chairman of Dynam Capital, the fund manager for VietNam Holding. We also have an independent board, and their job, amongst many other things, is to look at how the fund trades on the London Stock Exchange, and also to try and manage any discount to net asset value. But for Dynam Capital, we're a partner-owned firm. The team are all locally based in Vietnam. I'm the only one that's not. I'm normally either in Vietnam or in Singapore, where I reside, but today I happen to be in London. So it's a real pleasure to talk to you. We've been a fund, as Mark said, that actually has been around since 2006. Dynam has been managing the fund for the last 5.5 years. And we're very pleased to be an outperforming fund. We're outperforming our index over 1, 3, 5, and 10 years, delivering good growth, and we're also outperforming our peers. We're a high conviction manager. We run a concentrated portfolio of normally between 25 and 30 positions. We don't use gearing in the fund, and we take the role of responsible investing very seriously, and we've been a leading advocate of this for many years in Vietnam. We're a member of the signatory to the United Nations Principles of Responsible Investing since 2009, and we always score very highly in their reports. And one of the things I'll hopefully be sharing with you today, 3 themes that we look at: the industrialization theme, the urbanization theme, and the domestic consumer theme. And we'll explain a little bit about why we think these are robust themes and attractive themes in Vietnam. We're an active manager. We don't try and replicate any index. We sweat and focus all of our attention on our portfolio companies, but we can be very nimble around our stock selection and our portfolio construction. But as I've said, we do take ESG very seriously, and we find it's a great way to drive outperformance and also to provide some downside protection. Next slide. Try and do simple things well. If you put us in a box, we're looking at growth at a reasonable price. Try and find simple businesses that can compound their earnings with good management teams that will listen to us when we try and advocate good investor reporting, transparency, governance, and increasingly reporting on the key matters of ESG. We've seen a market that has good earnings per share growth, and yet our portfolio trades on a very attractive single-digit price earnings forecast. So next year, we think it's going to be a year where our portfolio could deliver 20% earnings per share growth, and yet on a very low single-digit PE. So we think there's good value, and yet there's very good growth. Next slide. And the next slide. So for those not familiar, Vietnam has a fantastic location. If you could choose your geography, Vietnam's a great place to be located. It's at the connection point of North Asia as well as Southeast Asia, a long, narrow country, 100 million people, a wonderful place to visit. If you haven't visited, then do book a holiday to Vietnam. It's a very interesting part of the world, and Vietnam's a wonderful dynamic economy in an interesting part of Asia. It's a young population. Half the population are under 33 years of age. It's largely a single ethnicity. Much of Asia, much of Southeast Asia, as you're probably aware, has many different ethnicities and tribal groups, but Vietnam is largely a single ethnicity, which provides a fairly stable socio-political environment. It's highly literate. The Vietnamese really value education, and it's a very digitally savvy population. E-commerce is growing at more than 30% per annum, which is the highest rate in Asia. I mentioned here on this slide the urbanization rate, and I'll be coming back to that. That's one of our key themes for the long term in Vietnam. But I'd say one of the strongest parts that drives the opportunity is a very positive macroeconomic environment, and also a very open economy, and one which is bringing lots of foreign investors into it who are manufacturing for export. Everything from 1 in 2 pairs of Nike and Adidas trainers to pretty much every Samsung Galaxy electronic device, and a whole host of products and services in between. And that's been enabled through a very open approach to trade. And I'll be talking about that in greater detail next. So Vietnam is a growth economy. For the last 30 years, its GDP has been growing at around about 6.5% on average. It'll be a bit lower this year, looking at under 6%, but that's still good growth given the mess that the world economy has been in this year. But in addition to just the absolute GDP level, what we're very interested about is the trajectory, the journey that it's on. I've been involved in Vietnam for almost 30 years, and in the last 20 years, investing in the public markets and the private equity markets as well in Vietnam. And 20 years ago, the per capita GDP was about $1,000. And even then, the Vietnamese people were saving for education and starting to invest. But today, that per capita GDP has gone past the $4,000 level. And this is a very interesting inflection point. When China, as a comparison, got to this level, it doubled the size of its economy in 5 years. Thailand similarly had got to this level before China and doubled in about 7 years. So we think the GDP per capita is at an inflection point, which will help drive the domestic consumer story, and more of that later. Next slide. The demographics are very attractive. Vietnam is a hardworking population. The mindset is looking after community, but also to better their lifestyle. If you ask a Vietnamese woman what she thinks about her economic situation, she will say that she's better off than her parents, but she thinks her children will also be better off than she is. So they're very forward thinking. And that young population, it won't last forever, but we're in a strong, long period of this golden demographics of the envy of much of Asia. So it's a very attractive part in its demographic cycle. And yet its labor is still relatively abundant and cheap, cheaper than Mexico, cheaper than China. And for IT engineers, 1/40th of the cost of a software engineer in somewhere like Japan. So tremendous potential. Next slide. And I mentioned this open economy. Vietnam, about 30, 40 years ago, opened its doors, quite literally. It was a policy called Deux Moi, which is open door, and started to enter the world stage by partnering with countries, and now has more than 15 free trade agreements in place. So much so that its trade, its exports and its imports account for about 200% of GDP. So one of the most open trading economies in the world. Not bad for a communist socialist country. Next slide. Also about 30 years ago, when Vietnam kind of came in from the cold, so to speak, it started to welcome foreign investors. And those foreign investors have been critical to the growth and development of the Vietnamese economy. And much of that investment is into manufacturing for export. So if you remember from that, the map of Vietnam, it's the strategic location at the heart of ASEAN, the Association of Southeast Asian Nations, but yet also very close to the dynamic North Asian markets, so China, Japan, and Korea. Recently, it's been attracting a lot of foreign direct investment as people are trying to diversify supply chains, shorten supply chains. Some people are trying to onshore back to America or nearshore, maybe to places like Mexico, but also to find friendly shores, such as Vietnam. So we've seen strong, robust foreign direct investment into Vietnam for manufacturing for exports. And this has been a key part of the GDP growth story in Vietnam. This is continuing. We had President Biden in Vietnam just a couple of weeks ago, and everyone got very excited about how Vietnam might further increase the value-added nature of what it manufactures and exports to the world's markets. Next slide. So the export story has been phenomenal. When I was first in Vietnam in the 1990s, I wrote to my mum saying that I thought this was going to be a new tiger economy, because Vietnam was exporting furniture and raw materials and commodities, which Vietnam still exports, but it's really been moving up this value chain. And that manufacturing for export sees some of the world's largest companies establishing a foothold in Vietnam, primarily for the export markets, but also for the markets around Southeast Asia. And as Vietnam increases in its wealth and consumer power, also for the domestic markets as well. So a phenomenal growth in such a relatively short period of time. You know, less than 50 years ago, Vietnam was at war. And so it's really emerged over the last decades as a key part of the world's supply chain. We're very grateful that the government of Vietnam has three noble aims. One is to see Vietnam continue to be this modern industrializing country. Second, to see Vietnam emerge as this key part in the supply chain. They have like a made in Vietnam policy. And if you look at your wardrobe, your running shoes or your running apparel or your clothes, many of them will actually be made in Vietnam already. And Apple AirPods and lots of Apple devices are also made in the country. And the third part of the government's initiative is to see that transformed into the wealth of its people. Maybe in similar ways to China, lifting 250 million people out of poverty in less than 20 years. Vietnam's also really trying to move its population into that middle income level. And so those policies are aligned with us as a foreign investor. Next slide. And that friendly shore, who can forget the kind of the memes of then aspirant President Trump back in 2018, China, China, China. And that China bashing continued through trade tariffs in 2019 and into COVID. And we saw the emergence of this kind of trade war between the US and China. And that has benefited Vietnam. Vietnam has been taking market share in terms of what America imports from the rest of the world. And so the growth in trade from Vietnam to the US has been dramatic. But Vietnam is a friend to all and a servant to none. So it plays a very close and careful political dialogue, not only with America, and as I say, President Biden was in Vietnam 2 weeks ago, but guess what? Xi Jinping is coming to Vietnam too in a couple of weeks' time. So Vietnam plays this clever balancing game. It really wants to be a manufacturing center for all countries. Next slide. So urbanization, it's perhaps interesting to look at this in the broader context of the world. And it may seem hard, but it was only in 1800 that only 2% of the world's population was urbanized. So that's 2% of the world's population living in cities. By 1900, that was only 5%. And in the 1950s, around about 40% of the world's population was urbanized. It was only in 2007 that more than half of the world is living in cities. So Vietnam's urbanization level is currently at 38%. So that was where Europe was at the end of the Second World War in the 1950s. China got to this level in 2000 and doubled in less than 20 years, a massive outpouring of cement the like the world has never seen before. And so as urbanization develops, which it will do in Vietnam, Vietnam won't stay at 38%. It will build more houses. The cities will continue to grow. And that has a positive effect, growing productivity, higher incomes, greater access to labor pools, as well as driving the rise of modern trade, such as supermarkets and convenience stores. Now, it's not all without problem. It does also have problems of environment and traffic, and these need to be managed as they're starting to be managed in Vietnam. But this urbanization trend is one of the three, perhaps, mega trends to keep an eye out for Vietnam. And that is an inflection point that, as I say, is where China grew very rapidly beyond then. Next slide. So even looking at the region, the urbanization rate is low compared to some of the perhaps more maturing parts of Southeast Asia, and yet the growth is high. So no market is always a smooth trajectory, and the last year has been very difficult in some ways for Vietnam, particularly in the real estate sector. But it's not due to an oversupply, as perhaps you might see in somewhere like China, but it's more to do with structural problems around financing, high interest rates, making mortgage costs very high, and the bond market having problems, so developers have been unable to build and complete projects. But there will be more houses, and there'll be more hospitals and more schools and more shopping centers. So the Vietnam economy is still continuing to see great shoots of prospect for the next 10, 15, 20 years. Next slide. The other thing is that growing consumer, that inflection point in per capita GDP that I mentioned. So we're going to see a tremendous, another 35 million more middle-class consumers by the end of this decade, by 2030. We've already seen car ownership double, and that does cause some problems in terms of traffic. Thankfully, that will be alleviated with a subway or an underground system that will open next year in Ho Chi Minh City. But we're seeing a dramatic transformation in how people go shopping in terms of modern trade. And that's an exciting prospect for that rise in consumerism. And as well as the Vietnamese become wealthier, they're looking to things such as life insurance for savings and for looking after the next generation. And a lot of this growth in the consumer activity is also driven digitally. Lots of apps, lots of access to data services at very cheap rates. So that information is more readily made available, but also people can click to buy. And that kind of omni-channel retail that we've seen in many other markets is also taking hold in Vietnam. And that internet economy is forecast to reach close to $60 billion by the end of the year after next. Next slide. So we've seen in the rest of Asia how modern trade plays out. And if you've visited Singapore or Malaysia or Thailand, you've seen lots of big shopping malls and shopping centers. So Vietnam's got a long way to go. But it's already seen a greater increase in that modern trade, driven also by the digital or the omni-channel nature. And COVID actually helped accelerate that in Vietnam as it did in a number of other emerging economies. So that urbanization, which Vietnam's at an inflection point, will further accelerate this rise in the domestic consumer as modern trade starts to replace the traditional wet markets that you perhaps have seen or visited if you've been to Southeast Asia. Next slide. So here just a snapshot that the macro around Vietnam. Inflation, which is a concern in many markets around the world, is less of a concern in Vietnam. It's reliant less on having to import everything. It has half of its energy supply domestically sourced through renewable means, and is not a massive importer of fuel. And also the government has been lowering interest rates for much of this year in an effort to kind of spur the economy, unlike other parts in the world where interest rates just seem to be going one way upwards. So Vietnam's on a different pace. And the currency, the Vietnam dong, in the face of very strong US dollar interest rates, which has put a lot of pressure around the world, actually the Vietnam currency has been relatively stable. It's been on a 30-year declining trend of about 2.5% per annum, which is not uncommon for an emerging market. But it hasn't fallen as far as the Japanese yen or some of the other currencies in Asia. So one of the ways that we think you can play the Vietnam story is obviously through the equity market. The equity market is still quite young. It's 20 years old. But what we've seen over recent years is a rapid rise in the retail investor. So now in Vietnam, there's more than 6 million domestic investors in the stock market. And that's been a big driver of liquidity. So you can see the chart on the left. Through COVID and more recently, liquidity has been as high as $1.5 billion a day in terms of trading liquidity. Now, across Southeast Asia, that's second only to Thailand. It's about 10 times the level in the Philippines or in Singapore. So it's an emerging stock market. And yet, even at these levels of valuation, we see tremendous growth, and the market's got a long way yet still to go. So the liquidity is improving, and the nature of the participants in the market are getting more active, particularly around the domestic retail investors. Vietnam, despite the strong growth, has attractive levels of valuation, particularly on a price to earnings basis, cheaper than much of Southeast Asia, and yet its return on equity and the profitability of its constituent companies is still high. So a couple of things to look at for Vietnam. One is the price earnings ratio is relatively low. The ROE, or the return on equity, is relatively high. So it's a good trade-off in terms of growth and return and valuation. Next slide. So for all the good news and all the characteristics that would position Vietnam very strongly as an emerging market, it's still classified as a frontier market. In fact, Vietnam accounts for more than almost 30% of the frontier index, with a whole bunch of countries there that you may have some or little exposure to. But actually, Vietnam punches above its weight. It really belongs in the emerging market category, but is not there yet in terms of the classification from people like MSCI and FTSE, and likewise, for a number of reasons. Next slide. So why is it not there? Well, MSCI and these other agencies, they look at a country and say, is it a level playing field for foreign investors? And they have about 18 criteria to determine and judge that. And institutional investors fill in a survey and say yes or no on these 18 points. Now, Vietnam is not there yet. On many of those characteristics, it does satisfy all the characteristics of an emerging market. But it has some foreign ownership limits. And that means that that's an obstacle to some foreign investors. Also, until recently, its stock exchange infrastructure was hard for foreign investors to apply to the market. You have to pre-fund your stock accounts. You have clearing at T+3, but that's starting to be addressed. There's new infrastructure coming to place that's going to quadruple the capacity of the stock exchange, lower the settlement to maybe T+1, and also remove over time the need to pre-fund your trading accounts. All this means that there's a good chance that within the next few years, Vietnam will get an upgrade. Bit like, from Division 1 to Premier League, will go from frontier market to emerging market. And during that period, we think there'll be even more interest in the Vietnam stock market. Next slide. So what we do as an investor, so for Vietnam Holding, as I say, we try and do simple things well. We take both the top-down, looking at the macro and the themes that we've described, but as well as a bottom-up approach, looking at the companies that we think are really exciting. Now, there's 1,600 companies in Vietnam to choose from, and we have a portfolio of 25 to 30, so we have to do a lot of work. But we use ESG, environmental social governance, as a tool to help us screen out, to select the good from the bad and the great from the good, and put those into our portfolio. We also want to encourage our portfolio companies to report more. It's good for us, it's good for our investors, to take investor relations seriously, to take corporate governance seriously, and also to report on the environmental impact. Not just so we feel good in the morning when we look in the mirror, but we know that over time, those companies in our portfolio who can evidence they're doing more on those dimensions will get better valuations. So it's selfish and self-serving to ourselves as investors. But it's a journey. We recognize, it takes time for these companies to modify their practice and take the medicine of responsible investing nature. We're very disciplined, active investor, but we're also very nimble, and that's helped drive significant outperformance for us against our peers as well as against the index. So if you take a look at our portfolio, we've got each of the key themes represented. Now, this changes over time, but what doesn't change is our concentrated portfolio. So we have about 60% of our portfolio is represented by the top 10 companies. Our number one holding, FPT, is a digital champion. It provides IT services in Vietnam to that growing domestic consumer base. It also provides education for science, technology, engineering, and maths to about 100,000 students in Vietnam. But it also provides software services to the world's companies. It has a big business in Japan. Japan, as many of you know, in many ways a modern economy, but in many ways a medieval ancient economy. And everything's very much paper-based in the governments and in the bureaucracies. The government wants to change this in Japan, so it needs to digitalize. But the cost of a Japanese software engineer is many times that of a Vietnamese software engineer. So FPT provides software as a service. It exports Vietnamese software engineers to Vietnam. It also provides cloud and data services domestically in Vietnam. So a tremendous digital champion. We also have a number of banks in our portfolio. Banks provide access to the greater part of the Vietnam story, yet trade very cheaply, 1.1 to 1.2 times price to book. And Vietnam as a country is underbanked. Only half the population have access to a bank account. So there's tremendous growth to come. And there's tremendous opportunities also for modernization and digitalization. There are no checkbooks in Vietnam. So you can imagine that as those new accounts are open, they will be digital and people will have app-based bank accounts. We also have logistics in our portfolio. Gemadep is one of the country's largest and most profitable shipping and port operators. And for us, that's one way to play the industrialization theme. Instead of picking a particular company that manufactures Apple AirPods or Samsung's phones, we're looking at the building blocks and the logistic chain as a way to play the growth in manufacturing for export for Vietnam. And we also have retailers. We have a wonderful jewelry business in our portfolio that plays to the aspiring wealth and the consumer demand from the Vietnamese population. So our portfolio does change over time. I say we're very nimble, but our core themes remain intact. And we're ideally trying to find businesses that can compound their earnings for the long term. So FPT, we've had in the portfolio, its top and bottom line growing at 30% per annum. If you look back over a decade, its average return on equity is 25% and no debt and net cash. Funoan Jewelry, our number 10 position, which is our jewelry business, when we first invested, the entire company market capitalization was about $100 million. Today, it's over $1 billion. So it's been a dramatic growth story in our portfolio. Next slide. One of the attractions of Vietnam is a relatively low correlation to the broader emerging market and frontier market. So for some investors in the UK, you might think, well, I'll give my money to a large investment house and let them worry about the country selection. Well, they'll go for the low-hanging fruit, and you may end up with a small part in Vietnam and a lot in other emerging markets. Whereas if you're prepared to look at perhaps adding a single country exposure like Vietnam to your portfolio, you'll get the growth, and actually you'll get some diversification benefits to your home country portfolio, as well as these broader emerging market portfolios. So we think diversification and growth are two great reasons for looking at a single country opportunity like Vietnam. Next slide. So myself and my colleague Tin and the team, we're focused purely on growth at a reasonable valuation in Vietnam, very experienced in the Vietnam market. And my colleague Tin is somewhat unique. So he was involved in consulting to businesses in Vietnam before there was a stock market. And since the stock market opened 20 years ago, he's been a leading figure in investing, but also in responsible investing. Tin co-founded the Vietnam Institute of Directors. And as well as investing in companies, he trains directors to go on the boards of these companies. So really, he's an authentic voice in good governance and responsible investing. Next slide. And we don't do responsible investing in ESG because it's popular or it's fresh or fashionable. We've been doing it for a long time. And so we do see the benefits. We see it as a great way to screen the opportunity set for us in Vietnam, but also to identify those businesses who take it seriously, and we think they'll get better ratings and better valuations in the future. So we provide training to our portfolio companies. We provide insights on best governance, and we're also affiliated with a number of regional groups looking at how companies can measure their carbon footprint, how companies can measure what they do in terms of their investor transparency. And as a firm, we take a simple approach, which is we want to do more with our portfolio companies on these dimensions of ESG. We want to measure more. We want to see how they make improvements. And then we want to tell people, we want to report more. So that's our kind of mantra for ESG, is do more, measure more, and report more. Next slide. So in summary, we think the valuations in Vietnam are attractive. We think we have a government that's aligned with foreign investors in trying to improve the industrialization, modernizing the economy, and to position the country as a key part of the supply chain, as well as raise the wealth of its population. These are all aligned with us as a foreign investor. So we see Vietnam growing its exports as it trades more with the US, as well as all the other countries it had free trade agreements with. We see the domestic consumption at that inflection point, and urbanization at an inflection point. And yet Vietnam is still that frontier market. And so don't forget that in a few years' time, we think it will be included in the broader emerging market, and that should see a re-rating for the market as a whole. So if you're in the 2/3 that have not yet invested in Vietnam, it's always interesting to look at it now and do your own research and see whether what we say stacks up over the longer term, but have a little bit of exposure to Vietnam in a portfolio to add some interesting diversification. But more importantly, come and visit Vietnam. It's a wonderful place to come, and we'll make sure you're well looked after, and you'll walk away with tremendous memories of a country that's at a point of transition, a country that's a position of growth, and really punching above its weight in Southeast Asia. Next slide. And reach out to us. We're very open and transparent, and the board of the fund are also very keen to engage with our investors and deliver solid performance to you as investors. So with that, I'll stop, and happy to answer any questions that people may have.
Thank you very much, Craig. Very, very interesting indeed. We have a series of questions. I'm going to start with a couple around the sort of the investment company wrapper. And the first one that leapt out at me is why the share buyback? I recognize that you are running at a discount and there'll be a discount control mechanism element to it, but the fund is arguably subcritical mass, and share buybacks is an interesting process at that point in the fund's development.
Yeah, so look, we're nimble. I think we're right sized for the market, and that's helped us deliver outperformance. In terms of the share buyback, so the board 5 years ago put in place a number of mechanisms to address the discount to NAV. And they have authority to enter the market and buy back, which they do, not to great volumes, but enough to show that they're active in that, and to act as a measure to control that discount. And the fund has the narrowest of the three Vietnam, has the narrowest discount to NAV of the three Vietnam funds listed on the stock exchange. When the share is bought back, it's cancelled, so it's actually accretive. So buying a share back at 15% discount, cancelling it, is a good investment decision, but also is a positive in terms of that discount to NAV. So I think in the round, it's positive for all investors, but it's a modest tool. The other tools that the board have used over the last 5 years, every now and again there have been tender offers, and then every 5 years there's a continuation vote, and the board saying, look, we understand that shareholders want to know that this is a loved, active product, an active fund, and try and do their best to prevent discounts getting out of hand. Offers obviously a great entry point for people to look at the story of Vietnam, which is a growth story. If you can buy a portfolio of publicly listed equities at a 13-14 discount, then there's nothing hard to value in the portfolio. It's not a discount because there's uncertainty on the pricing or the NAV. These are all liquid shares that we value every day and could be liquidated very rapidly. So the discount is mainly just an imbalance in the supply and demand on the London Stock Exchange. So that's why there's a buyback mechanism there, just to kind of keep things at an even kilter.
Thank you. And I presume, well, so have there been secondary capital raises, or is this essentially the original capital raise that is still growing with the fund in the market?
Yeah, there haven't been secondary placements at a discount to NAV. It's hard to, or you can't issue more shares. And in fact, over the years, there have been a number of tenders. So shareholders have seen tremendous amount of capital returned to them as well as seeing the strong outperformance of the portfolio. So it's the initial capital that's grown and then has been shrunk as there have been tender offers and some of the share buyback. But there haven't been new placements of shares.
Okay, and you mentioned that you think the fund is the right size for the market. How do you calibrate that? What would make a larger fund logical for Vietnam?
Well, when I say right size, it's because it means that we can be nimble around the opportunity set. So we can get excited about a small company, which if you were managing, $3 or $4 billion, would be too small, wouldn't move the needle. And yet we found businesses that we could buy into that they can grow rapidly and become a large company, but we were able to invest in them at an earlier stage. Also being a right size, $100, $200 million fund size in Vietnam means that tactically you can move around relatively more quickly, a little bit under the radar screen, and easier to trim and change the portfolio as needed tactically. And that's driven a large part of our outperformance, being nimble around that. So right size is a counter to what we sometimes hear that we're too small. We think we're perfectly formed.
Thank you. Another sort of wrapper level question: dividends and dividend policy. There's no dividends coming out. What's the thought?
No, that's right. At the moment, there's no dividends. I know. I think every year the board looks at that, but no, there's no dividend currently. The share buyback, in some ways, can be seen as a way that money is returned to tendering shareholders, but there's no dividends at the moment to reinvest it in the portfolio.
Thank you. You mentioned that the portfolio is liquid. And there's a question here from Bill Faulkner Corbett, which is, I always like to check the underlying portfolio and investment trust for emerging markets. I use ft.com. I tried checking all of the companies mentioned in your 31 August 23 fact sheet and could find only one, which is VinFast. Do you know why the ft.com doesn't have any details of most of the portfolio companies?
That's interesting. Actually, VinFast doesn't trade in Vietnam. It's listed on NASDAQ. So I think it's probably a quirk of that ft.com site. So all of our companies are listed in Vietnam, and some of them have massive amounts of daily liquidity. We could liquidate the portfolio in less than 30 days. I don't know why ft.com doesn't cover them. But if you go to the London Stock Exchange website, that may have more information. Otherwise, you have to go to the Vietnamese stock markets to look at the underlying stocks there. But they're all listed. And yeah, a quirk, I think, probably of FT.com. But VinFast we don't hold. VinFast is listed on NASDAQ. Yeah.
Okay, and you say you don't hold VinFast?
No, we don't, and very few people do because it's thinly traded. VinFast is the electric vehicle subsidiary of Vincom, which is one of the largest conglomerates in Vietnam. They have 3 listed companies in Vietnam, and then they have one company which is listed on NASDAQ, but it's thinly traded. I think there's 1% free float, something like that.
Okay, then I will skip the question on whether or not you managed to sell VinFast in the incredible boom in its share price.
We didn't bother buying in to that. No.
Understood. Question on Cambodia. John Foley has noticed the boom in properties construction around Phnom Penh earlier this year. Is that something that you look at? You're not fully restricted to Vietnam, I noticed from your.
We're not, but we're just invested in Vietnam, and some of our Vietnamese companies do have activities in Cambodia and in Laos in the region. Gemadep, for example, our port operator, has investments in Cambodia, but we focus on Vietnam. There's plenty of opportunity for us in Vietnam. Cambodia does have a stock exchange. It's very small. It's very liquid. Whereas in Vietnam, we get good liquidity and a broader range of companies that we know. Okay. So we're not invested in Cambodia. No.
Thank you.
But we know the market very well. We know Cambodia very well as well.
Thank you. Question from Paul Taylor. How exposed is the fund to a further downturn in China?
It's very interesting. So China is an important market for Vietnam. Vietnam exports food, vegetables to China. So China's a big buyer of Vietnamese soft commodities. Vietnam also imports raw materials from China and semi-finished goods. So there's a very interesting and important kind of bi-directional relationship there. But it's also different. So the slowdown in China, affecting a lot of the real estate in China, is because of oversupply. Whereas in Vietnam, it's more because of access to financing, both on the retail mortgage level, but also corporately on access to corporate bonds and that market. So, I think the whole world's exposed some way or other to China, but it's a two-way street. So we haven't seen any further deterioration. I think one of the concerns for places like Vietnam is more about what's happening to the rest of the world in terms of consumer demand. And early this year, I think the US inventory levels were high. They're coming down, perhaps restocking, coming up towards the end of the year. So we're starting to see exports pick up. So on the China side, we keep a close eye on it. But Vietnam, the economy is starting to pick up after perhaps a quieter first 6 months of this year.
Thank you. Another macro question. You talked about the stability of the Vietnamese dong relative to the US dollar, but the question is, how exposed are our shareholdings to the US dollar? So what does dollar fluctuations do, particularly for a sterling investor?
Look, great question. So we have a London listed fund quoted in sterling, and the entire portfolio are in companies in Vietnamese dong. So you've got dong to dollar to sterling around that. So the underlying, yes, is exposed to currency devaluations. But as I've said, over 30 years, it's averaged about 2.5% per annum. In the last 4 or 5 years, it's been more stable than that. And the government manage what they call a floating or a crawling peg against a basket of currencies, which includes the US. But the US dollar strength has obviously put some pressure on Asian currencies. So, the interest rates in the US make it very attractive relatively. So clearly there's been some pressure around Asia this year, massive pressure in Japan with the yen at historical lows. Vietnam, I say, a little bit less impacted because its move is against a basket of currencies. But notwithstanding that, it has had an impact. So obviously any slowdown in the rate of increase of interest rate hikes in the US, I think will benefit emerging markets more generally, including Vietnam. But despite those issues, Vietnam has been generating a lot of foreign exchange. It's got a record trade surplus this year. It's got a record level of foreign direct investment. So its kind of balance of payments is quite strong. Its balance sheet's quite strong. And so that provides a little bit of strength to the local currency, to the Vietnam dong.
Thank you. At the portfolio level, I noticed a 41% exposure to financial services. Is that just a function of the makeup of the economy, or is there a thought process behind
Yeah,
it?
it's actually so banks, the index or the market has 42% in banks. We're at 29%, so we're underweight to the banks, although we like the banks we're in. And then in terms of financial services, adding in the stockbrokers and what have you, that's a function of the economy. So you've got 40% of the market is in banks, 10-15% in real estate. We're underweight both of those sectors, but within those sectors, we've found companies we really like with great growth prospects. So it is a function of the economy. And actually, the banks are an interesting way to play the broader economy, because the stock market is still quite young, 20 years, and not everything is in the stock market. So banks are exposed more to the macro story, the export story, as well as the growth in domestic consumption. So it's a way to get a broader exposure to the opportunity. And yet the banks are a relatively modest level of valuation. And some of our banks have been growing 30, 40, 50% in their earnings this year. And we think some of them will be growing 30, 40, 50% next year. So good growth, despite a very weak global economic situation.
Thank you. Can you talk a little bit about directors' holdings, both at the trust level and at the manager level? Is there an investment by directors and managers?
Yes, yeah. Well, each director has shares in Vietnam Holding that they've bought. They're not gifted; they've bought with their own money. And myself and the management team also buying. It's impossible for Vietnamese people to buy into a London listed share, so we have like a shadow scheme for that. But I buy, and I'm a holder of Vietnam Holding, and continue to buy when I'm allowed to, when it's market a clear process for doing so. But yes, so directors are all invested, as is the manager, as I am. Yeah.
And do you have a ballpark as to what that collective holding looks like?
Probably half a million pounds collectively. That's I'm about 300,000, something like that, and then the other directors.
Yeah. Thank you very much. Question on ongoing charges. They show on the IC website at 2.74%. I think share Paddy's column was 2.73, of which your AMC I think is 1.75 at current AUM. Can you just run us through the makeup of that 2.74 and talk about it relative to equivalent funds?
Yes, I will do. So as you say, the management fee that is paid to Dynam Capital it's on a reducing scale. It's currently at 1.75. As the trust gets bigger, that falls down to close to 1%. There's no performance fee charge, which perhaps there is in some other funds. It's just a pure management fee of 1.75% of NAV. And then the rest of the charges are mainly due to being listed, and the costs associated with that, and the board fees, and those and service charge and audit fees, etc. That is one area where size works against us. I have to be honest. That's why we're at the higher end of the ongoing charges of the other London listed funds. But our performance is all after fees, and we're outperforming after fees. We're outperforming our closest peer by between 6 to 10% year to date. So that's 600 basis points, almost 1,000 basis points for one of our other peers after all of those fees. So although our ongoing charge ratio is a little bit higher than our peers, after all of that, our outperformance is much more significant. Our performance is stronger, and the discount to NAV is the narrowest of those of those peers. But the board are aware of that. That is a function of size. If as we get bigger, many of those costs are fixed costs and will lower the ongoing charge ratio. And it's backward looking. So last year, the market was down 30. The market was down about 40%. Our NAV was down about 30%. This year we're up 20 odd percent. But those ongoing charges are backwards looking. So as the NAV increases, we'll see those charges decrease.
Yep, thank you. Question, is Vina Capital your closest peer?
There are two peers. I would say Dragon Capital, which manages Vale, which is a much larger trust, and that's purely listed in quoted equities or listed stocks. Vina Capital manages many mandates, including a London-listed fund called VOF, the Vietnam Opportunity Fund, which has, I think, a significant portion in harder-to-value kind of private companies. And as a result, it has a much wider discount. So I'd say in terms of the assets that were invested in, Vale, which is managed by Dragon Capital, is probably closer. We've outperformed Vale, I think, this year to date by about 600 basis points. And we've outperformed the Vietnam Opportunity Fund, that's the Vina Capital Fund, by over 1,000 basis points year to date.
Thank you. So the last question isn't really a question, but it's more feedback. It doesn't surprise me coming from a share stock stroke Signet audience, and it's really for your benefit as feedback. I'm not sure I agree with it, because I tend to take the view that you expressed earlier, but the comment from John Foley is, would prefer a dividend rather than a share buyback. I can then decide if you're offering value, and if so, will reinvest. If not, I can place my money elsewhere. Mathematically, I think he's on the wrong side of that one. I think you prefer the buyback, and manufacture the dividend. But you'll take the comment that these are.
No, it's a very good comment. I have had that comment from a couple of other shareholders, and I do report this back to the board for them to consider. One of the trusts, the Vietnam Opportunity Fund, does pay a dividend. Vale doesn't pay a dividend. In some ways, it's still a manufactured dividend because it's, I think, higher than the dividend income they get from the underlying portfolio, because some of their portfolios in private companies that are not traded. Our portfolio generates about a 2% dividend yield, which is currently reinvested, and part of that obviously also in terms of the buybacks. But it's something we'll look at, and it's something that I appreciate John raising that, and it is something I'll feed back to the board.
Fantastic, Craig. That is all the questions from the audience, all the questions from me. It's been a fantastic and very interesting tour, fast tour around Vietnam.
Yeah.
I'm sure you have stimulated a load of interest and excitement. There is a comment from John again saying, thanks very much, good presentation.
Thank you so much.
With that, I'll release you if I may, and thank you very much for presenting to us tonight.
My pleasure. Thanks ever so much.